All right, everybody. Everybody's joining in. We just broadcast. I'm going to go ahead and get this recording. It is recording. And we'll give everybody a few minutes to get logged in. Not a few minutes, but a little bit. I see lots of familiar names jumping on. I'm glad that you guys are joining us. Steve Tellis, I see you there. All right, I'm going to go ahead and get going because I do have a lot of materials, and those of you that know me know that I tend to get long-winded. So I'll get rolling. So my name is Amy Knight with Knight CPA Group. I do want to say, please understand I am a CPA. However, I'm not an attorney. This is not legal advice. If you have anything specific, you probably need to seek legal advice on this. So, don't construe this as to, formal advice. I'm just here to share with you what I know, what I've learned, what I've studied, and just try to share the education with everybody out there in our community. This is geared specifically towards home health, hospice, and long-term care providers. However, this first section is all really going to be about the PPP loan forgiveness and how that works, stipulations, exclusions, things like that, and how you might prevent forgiveness or lose part of your forgiveness. And that's going to take up about the first half of the presentation. And so I invited basically anybody that wants to listen, you're welcome to, and then we will jump into the healthcare specific items once we get past that. So moving on, so the agenda, again, we're going to cover PPP, including the loan forgiveness. I'm going to skim past eligibility, what qualifies, how you apply for it, and what counts as payroll costs. I left it in my slides. I have a very thick slide deck this time. I've got 55 total slides. Again, I'm long-winded. So I like to include everything. So if you want to read it later, you can read it later. I'm going to skim past those first several slides. Then we're going to jump into the EIDL grant and loan, so the economic injury disaster loan, that's straight from the SBA, the HHS Stimulus payments, which is also known as provider relief funds, the Medicare Accelerated Advanced Medicare payments, and then the new, it's not new, this actually came out before most of everything else, but what's starting to impact our industry is this Emergency Family Medical Leave Act and Emergency Paid Sick Leave, and how can you incorporate that with the PPP, and then we'll just wrap up with what we know. We've got 90 minutes scheduled. I've got a really clear timeline for myself, so I'm going to try to stay on that as much as possible. And that'll leave us about 10 minutes at the end. So I'm going to try to actually speed it up and make up some time so that we can do Q&A. I've got Paul Alvarez, CPA here in my office online with us, and he's going to serve as my moderator to help expedite the questions. And it just helps me get through them a little bit quicker. So here we go. So jumping to the PPP, Paycheck Protection Program. Most of you guys have heard about this by now, and I know of my clients, most of you have already gotten it and been funded. Again, designed to keep America working. You got 2.5 months worth of payroll, and it can be up to 100% forgiven if it's spent properly. I will point out, funds are still available if you have not gotten this loan. It's kind of stalled out. People have applied and got funded. The big companies bailed out, not all of them. And so there are banks that are still doing this. If your bank is not doing it, feel free Vista Bank, V-I-S-T-A Bank out of Texas is doing these loans. Look them up online. James is my contact. There is another bank in Oklahoma that I know that's doing these. I know Diane Struby's on this call. And Diane, maybe you could put it in chat of what that bank is if you're in Oklahoma. Also, I do want to say, if you've got a question, please put it in the Q&A section, because that's the only place that we can really field questions and mark them as answered and all that. So we won't be able to answer questions out of chat. So if you got one, I see one there from Greg. If you could copy and paste that over into the Q&A, we'll make sure it gets answered. All right. Again, payroll costs, just real quickly, is basically going to be wages and direct wages, but it also includes your health insurance and your retirement benefits and SUTA. Does not include mileage, contract labor, or any federal taxes, which is what that side says. Again, these are the ones I'm going to breeze through. You're then allowed to use it on payroll costs that we previously defined, plus any mortgage interest or rent and utilities and interest on other obligations. So interest, rent, and utilities plus payroll. Now let's jump into forgiveness, because this can get super, super sticky. The starting point for forgiveness is, first of all, it's how much did you spend, and it's the lower of, which I did not put on this slide, it's actually the lower of how much you spent or the loan amount. So if you spent more than your loan amount on qualified expenses in that 8-week period, you can only start with the amount of the loan and not any more. If you did not spend all of your loan, and let's say you had a $100,000 loan and you spent $80,000, then you're going to start with $80,000. That's your starting point. You have 8 weeks, which is going to be considered or referred to as your covered period. Your covered period is the 8 weeks following the day the money hit your bank, the date of the first disbursement. Now, there's a little trick here, not trick. There's one thing to be aware of. There are some banks that are not giving disbursements until you prove that you paid payroll and you need the disbursement. If you are in that case, then it's the date you get your first disbursement. I don't know how the banks that are doing that are handling it. I think they're actually funding it into your new bank account. They probably made you set up a new bank account, and they aren't letting you take any out of it until you prove it. So they're kind of treating it like a construction loan, which we don't know where they got that guidance to do so. But again, it's the date that it hits your bank, and this is critical because you got 8 weeks, and you can't take 8 weeks and then wait till you get to the end of 8 weeks and, like, on the next day realize, oh wow, I didn't spend everything I was entitled to spend, and then make a catch up. There's no catch up. It's got to be spent in this 8 weeks, and we'll get to that in a little more detail. Again, what you get to spend it on are employee wages, salaries, commissions, sick leave, tips. Sick leave needs to have an asterisk by it. There's a clarification on that. We'll get to that later. It cannot include anything paid under the Emergency Paid Sick Leave Act, okay? So if you're paying that special sick leave that you get a payroll tax credit on, you don't get to count those wages. If it's your regular policy sick leave that you always offer, those wages do count. Group healthcare benefits, the employer portion, the employer contribution of your retirement plans, and again, state unemployment, which we call SUTA, and interest on any mortgage obligations, and rent, building, storage, not equipment. We do not have very clear clarification on this, but the professionals feel like it does not include equipment because the way they talk about rent, it's always in relationship to interest on a mortgage and with utilities. So we don't think it includes equipment rent, but that's, that may change. Utilities defined as gas, water, electric, trash, telephone, internet. We're adding medical waste disposal, shredding, janitorial. We consider those all to be utilities. Now,
Amy?
Yep.
Had a couple of people ask how they get the slides to the presentation.
Good question. At the end, in 2 days, you'll get an email, because I did 2 days, because sometimes it takes me that long to get the recording figured out and online. The recording will get posted to YouTube, so you'll get an automatic email that has a link to the recording, as well as a copy of the slides. So that's why I left all of this in there, because I will put it out in the in an email to everybody that's registered. Okay. So one quick qualification, not quick, but on the whole PPP is payroll in regards to forgiveness is limited to $100,000 per year per person, and that's annualized. That doesn't mean in 8 weeks you can pay them up to $100,000. It means they cannot be paid more than $100,000 annualized, which is $15,385. So no one person can be paid more than $15,385 during that 8-week period. Now, what this does not mean, it does not mean you have to reduce your people that are paid over that amount. We met with clients yesterday that an accountant told them you have to reduce everybody's salary down to $100,000. Not true. That means is anything over the $100,000 annualized needs to be excluded from your forgiveness calculation. Your employer contributions to health insurance and retirement do not count towards that $100,000. So the $100,000 is strictly wages. Anything that is a taxable wage, including hazard pay, including any kind of bonus that you might issue, is what counts in the $100,000. You do not get to include your employer FICA, Medicare, Social Security, FUTA in your forgiveness. We don't know why, that's just what they said, and they've been very clear about that. I do not expect that to change. Covered period, again, we already discussed that, starts 8 weeks, starting the day you receive your first distribution, and the bank only has 10 days from the date of approval to the date they give you the money. So the 8 weeks can extend past June 30th. The original act kind of read kind of funny. They thought it would all be funded prior to that. So forget about June 30th as being like a hard cutoff. If your 8 weeks goes past that, that is now fine. So the next big question that us accountants are really waiting for an answer on is this incurred and paid. So incurred and paid, or incurred and paid. So the statute says the cost must be incurred and payments made, but the way historically that laws are written, the proper interpretation is that every word has a very specific meaning. And so we have to assume that it means cost incurred and payments made during the 8 weeks. So does that mean anything incurred and anything paid? Or does it mean that that cost has to be incurred and paid during that 8-week period? That's a very, very restrictive view and would really set up for a lot of weird accounting principles to be enacted. We are waiting for interpretation to come out on this. We feel like it's going to be, I think it's going to be cash basis. I think especially for payroll purposes, the payroll, I think the banks are going to go on check date. Now remember, it's the bank that is granting you forgiveness. So it's the bank that you'll be working with. True, the bank has to meet the SBA standards, but the bank is and the bank wants it forgiven. So that's the good thing. This is not Medicare coming in with a Z-pick trying to shut you down. This is the bank wanting it to be forgiven because they don't want your loan on their books, honestly. So we're expecting guidance to come out, and we're expecting it to, and we're following that it's going to be based on check date. So that's for the payroll piece. Now, apply that over to rent and utilities, mortgage interest, rent, utilities. Everything with regards to rent, utilities, or mortgage interest, all of that had to have been in place as of February 15th of this year. Nothing new. You can't go out and buy a new fancy internet package or whatever. It's got to be all your normal bills. They're only going to allow 2 months worth of those expenses on each of those. You can't say, oh, I was behind 6 months on my rent and I just got everything caught up. That's not going to fly. None of that's going to fly. So just don't even try. Don't even go there with that. So again, we think that this is going to be really, it's going to be the bank, and we cannot imagine trying to teach the bankers an accrual basis payroll and how that works. And okay, well, there's 14 days in the pay period and 8 of them go to this period. It's not going to happen. So I feel firm that it's going to end up being cash basis. However, I am stating on the record, I might be wrong, and if I am, I will send a blast out saying that, hey, they've come out with guidance and here's what it says. So there is going to be no, I wish this said no tax deduction for PPP expenses. So the IRS has come out. Okay, first of all, Congress said they don't want PPP forgiveness to be taxable. In a typical situation, forgiveness of debt is called cancellation of debt. It's issued to you on a 1099 as income, and you have to recognize that as income and pay tax on it as income. And so Congress said we don't want it to be taxed. And so the IRS has come in and said, okay, that's fine. We won't include it in income, but since it's not taxable income, the expenses paid with that money therefore cannot be taxable deduction or tax deductions. So you can't get a double tax benefit. If they don't include the income and you also get to deduct it as a tax deduction, then that's kind of a double tax benefit. However, that's what Congress didn't want there to be a tax implication on this. The IRS has come out, they issued a notice, and they've been very clear, those expenses are not deductible. There are congressmen working to try to get a legislative fix to this. We'll see what happens. Again, as of today, there's been no change on that stance. And that's another one where we check every morning for new guidance and haven't gotten anything new there. So how do you achieve maximum forgiveness? Which is what, as far as I know, everybody I'm working with and everybody I've met with so far is trying to achieve maximum forgiveness. As part of that, they want to spend the maximum amount. They want to spend their full loan and get it fully forgiven. Those are the cases I've run against. Now, if you choose that you would rather just pay normal payroll, normal expenses, you got them covered, you're back on the good track, you don't need any more of that money, you can absolutely give it back, or you can even convert it and let it ride on a 2-year note. On that 2-year note, the way the language was originally written scares me a little bit because it still says that it's got to be spent on authorized expenses, which are the payroll, rent, utilities, interest. So even if it's on a 2-year note and you got $20,000 left over, I don't think you can go buy a $20,000 server or a new car for your marketer or whatever you might want to do. That they said that can be construed as fraud. So I'm a little cautious on that. As far as go ahead, Paul.
Oh, I'm sorry. There's a question about if software can be considered utilities.
My stance is no. To me, I mean, I know that they're, maybe it's a lease, but it's really not. It's really a subscription. And so my stance is no. And for those that don't know me, I'm not known to be super conservative. And so I'm only going conservative where I feel like it's really getting away from the intent of the law. So I'm being conservative. And no on office supplies. I just saw that pop up. I'm being conservative on anything outside of payroll because we're going to get to another piece of the law, which means 75% or more has to be spent on payroll. So you start trying to spend it on everything else, you're not going to meet that requirement. And so I'm being conservative on the other expenses and less conservative on the payroll side. So moving on, and I did I did want to say we're going to try to answer some questions as they relate to the topic we're on, because I did invite, like I said, some people to join for the PPP part, and then they may jump off because they may not be Medicare providers and they don't care about the Medicare help that's been issued out. So that's why Paul's kind of jumping in. We're going to answer some as we go. So to achieve maximum forgiveness, and I'm sorry, the allergies are bad. My nose is itchy. You got to plan. You've got to plan this out. Like I said, you can't wait till the 9th week to figure out, oh, I didn't spend all my money and I wanted to. I really want to pay my people some bonuses. You got to pay it during that period. You've got to execute, which means not only do you plan it out, but now you got to execute it. So you got to stay on top of this, and you've got to document everything. The good thing is, in our industry, you guys are used to that. You do a lot of documentation on all of your clinical. Carry over those habits into this financial piece of your business. Document everything. Keep really clean record keeping. With that, we have, and it may be in a later slide, we are recommending, and everybody I know is recommending, including every bank I'm working with, set up a separate bank account. A separate account on your QuickBooks file doesn't do it. A separate bank account at the bank to deposit the funds in and then spend out of there will provide you with the most clean record keeping you can have. And then in addition to that, keep all your payroll journals, keep your calculations, because not the whole entire payroll is not forgivable. So don't use, oh, I'm just going to fund my payroll out of my PPP account. That's not how it works. You fund your payroll out of your regular operating account and you reimburse yourself out of the PPP account. Again, I already mentioned this, that you do have to ask for the forgiveness comes through the lender. Some things they might look to see, they're going to want to see your payroll tax filings, your payroll reports, your SUTA reports. They're going to want to see probably if you've got a lease, they're going to want to see your lease agreement. They're going to want to see your utility bills. They're going to want to see documentation of all of this. Just expect it. Don't wait for it. So what we're doing, create a file. Take a copy of everything you're paying. Every time you take a draw out of that account, you put a piece of paper in that file to justify it. Again, if you don't get forgiveness, and there's a very real possibility that you may not meet 100% forgiveness because there are lots of qualifications for you to, hoops to jump over to get there. The loan can be on a 1% 2-year note, or you can pay it back at any time. If you do take it as a note, payments will be due come around October, November. It depends on when you got funded, but you got 6 months of no payments. So after that point, you'll start paying, and at that point, you only have 18 months to pay it off because 6 months are already gone, because you're already in a 2-year loan, and it's already a loan. It needs to be a loan on your books as of day 1, and there's special kind of accounting that goes with that. So 8 ways to lose forgiveness. This is an overview, and we're going to dive deep into each of these, and I'm going to try to be as thorough but as quick as I can so we can get through it all. Headcount, you lose people. Pay rate reduction, you had to cut people's pay rates, or they lost, or even from a lack of hours to be worked or visits to be performed. Okay, there's a lot of questions around that. I've got answers to them. Well, the best answers I have right now. If you miss the rehire window, if you miss the pay cut reversal window, if you have bad documentation, if you can't document it, they're not going to give forgiveness. Also, this 25% non-payroll-cost rule, and failing to spend at least 75% on payroll cost. And there's this whole 75% thing gets very, very confusing, and I hope I can kind of clear it up a little bit. And then failing to spend the full amount of the loan. If you don't spend it all, it's not going to all be forgiven. Headcount. If this is going to be calculated based on your FTE count. So you're going to take your FTE, you're going to count your FTE from this, the first period is 2/15/19 to 6/30/19, or 1/1/20 to 2/29/20. Figure both of those numbers. You're going to want to go with whichever has the lowest. That's going to be to your advantage. Use the one with the lowest. So that's your baseline. The rule is you have to keep that baseline through the covered period. Now, what's still at question that we don't know is do you have to maintain it for the whole 8 weeks? I don't interpret the rules that way. It says it's got to be reestablished. Well, does it have to be reestablished by the last day of the 8 weeks? Does it have to be reestablished by June 30th? Or does it have to be established in June? We're waiting for guidance. What I'm looking at, it over and over refers to reestablished by 6/30. I feel like they intended 6/30 to be the end of the 8-week period. So I still feel like it's going to be either by a certain date or really by the end of your 8-week period. Because if you think about a restaurant that can't open and be open right now, but they say, we're going to pay you to bring your people back on and ramp back up, they're going to allow you to ramp back up. You know, that's my interpretation, waiting for further guidance. But if you don't, if you have a reduction in headcount, so let's say you had 10 people, full FTEs to begin with, and you've lost 2, and now you only have 8 and you only maintain 8, your 20% reduction in headcount will cause you 20% of your forgiveness to be not forgiven, okay? Here's an example. I guess I could have used these numbers. Okay, it is basically 5 FTEs and you terminate 2 people before the period even begins. You're down 20%. So you're only going to have, so you're going to be 20,000 of this example, $100,000 loan is not going to be forgiven. The other one is a pay rate reduction. This is really going to impact home care hospice agencies drastically, I think. Pay rate to me means $50 a visit. $15 a visit, $75 a visit. However, the way I read the regulations, the rule, I feel like the interpretation is, and every professional I've met with interprets it to be total pay. So a reduction in your weekly pay, in your biweekly pay. So meaning your wages. So not the rate of pay, but your total wages. So if you typically are a employee, I'll follow this example right here, you typically earn $1,000 a week, and you know, say you do $100 a visit and you do 10 visits a week, so you're at $1,000 a week, and you're down to 2.5 visits. I don't think that really works, but you get it. $250 a week, then that is a big reduction. That's a 75% reduction in rate. So even though you didn't reduce their rate, because their volume is down, you're going to fall into this trap right here. So I've got some suggestions for how to make that up as we go on. Back on this, if anybody over $100,000, say you had somebody at 150 and you reduced them down to 100,000, that's more than a 25% reduction in pay. That doesn't matter. It only counts once you start reducing them past 100,000. Down from 100,000. So if you took somebody from 150 down to 100, that's in excess of 25%, doesn't count. Again, many of you guys pay on a per visit or per hour, and what I just said, I don't think it's the rate that matters. I think it's the overall wages that matters. What we are recommending is that you consider taking some of your excess funds. So when you get your funds and you do a projection, most likely you're going to end up at the end with an excess amount to be spent, and you're going to find ways to spend that money. We're saying that's a great way to use it, is you need to preserve your full forgiveness. You're going to want to pay for those missed hours or missed visits that your nurses and your field staff aren't able to make. And what we're recommending is you create a special pay item for this, maybe something like COVID missed visits or COVID missed hours. And I would even, you know, set it up as an hourly pay item. Let's say your nurse normally does 10 visits a week and they're down to 6 visits a week. Put 4 visits in this COVID missed visit at their $50 a visit, $75 a visit, or whatever. That way you're getting them back up to their full pay rate for this regulation. And that way you don't jeopardize your forgiveness. Now, if you did lose some people, you have a window to rehire them. And so if they were laid off during February 15th to April 27th, you're going to have this forgiveness problem. But you can rehire, or as the new regulations come out, attempt to rehire, we'll get to that, by June 30th. Again, I still have June 30th in here. I'm saying by June 30th or the end of your 8-week period. Again, we don't know yet what that looks like. Attempt. So one of the biggest questions is, I've tried, especially if you have PAS attendants, caregivers, I've tried to get my attendants to come back, but they're making more money on unemployment and they won't come back. So a new clarification came out that said if you've got a good faith written offer to rehire at same pay rate, same number of hours, and it must be documented, make sure that is in writing. You offer it to the employee, get their rejection in writing, document your files, then that head count will not be used against you when we figure the forgiveness. So let's say in the previous example, you went from 10 to 8, and those 2 that you try to bring back on won't come back on, and you've got all the documentation to support it, then you can go, and that will not be held against you on your forgiveness. I am getting hot in here. This is light. Okay. And there are some rumors floating around just in the last couple of days that this might be extended. They're actually talking about the 8 weeks may be extended all the way out to 24 weeks. I don't want to advise on that whatsoever, other than there are rumors floating out there. And it just goes to show you that this is constantly moving. So we're doing our best to keep up with it. Missing the pay cut reversal window. Again, if you had to cut people's pay, or maybe you didn't cut their pay, but the reduction in volume has therefore cut their pay, you've got this window to bring them back up to full speed. And I recommend just using your PPP funds to pay them up to the true amount. Let's see, sorry, I got distracted. Somebody came and told me they turned on the AC for me. Oh, I feel better. 40% cut in pay wages means that there's 40% less payroll for forgiveness. So what this means is, this is like, there are so many traps to this, and I love it, where people say, oh, the PPP is very black and white, and I get it. All right, cool, good luck. Let's say you had a 40% reduction in wages that you can't restore until the very end. Well, that means that of your normal payroll, you know, say your payroll is 100,000 normally every 2 weeks, and you've only been able to pay out 60,000 every 2 weeks. You're going to have a huge deficit of what you've spent. You're going to have a huge bucket of unspent funds by the end. So not only are they going to reduce your forgiveness, the amount that you're starting with in which to calculate your forgiveness is way reduced. There are lots of pitfalls in this, lots of pitfalls. Again, this is just more about if you try to rehire somebody and they don't come back, you can read this. This is the exact quote out of the FAQs on the Treasury website. It's where that's from. SBA issues for PPP loan relief for employers. Again, this is more of the same. I'm sorry, I'm not good at just reading slides, which I don't like sitting through presentations like that anyways. Okay, so I'm going to flip through this. Okay, bad documentation. I don't think I need to spend a lot of time on this. Again, we've been advising to put the funds in a separate account, and we think they need to be moved to the operating account as they are spent. I will say that I just saw further guidance stating that exact thing, that they need to be withdrawn from the PPP loan as they are spent. I would not recommend waiting until the end of the 8 weeks and saying, okay, I spent all this on payroll, I want you to pay me back. I don't think that looks good. Okay, 25% non-payroll cost rule. The act says that you can receive forgiveness if you spend money on payroll, rent, interest, utilities, but they further went through and defined that not more than 25% can be spent on those non-payroll costs, which means they expect you to spend at least 75% on payroll. Now, the flip side, so not more than 25% on other. However, on the 75% being payroll, you can spend more than 75% on payroll. Now, here's the trick. And I don't think it's intended this way, and I think we'll get a technical clarification to come through. There are many places in the interim final rule that state at least 75% of the PPP loan proceeds shall be used for payroll. That is not the same as saying 75% of what you spend has to be spent on payroll. It's worded two different ways throughout the interim final rule. Okay, follow me. You got a $100,000 loan. 75% of the whole loan has to be spent on payroll or you get no forgiveness. That's kind of how it reads. We don't think that's the intent. We think they'll clean that up. Or is it, and don't get me doing some bad math, I have an example. Here it is. Or $100,000 loan, but only you were only able to spend $60,000 in payroll, which means that you've got 60% of the loan proceeds, so that's not 75%. So does that, and then you spend $20,000 on other costs, which is, if you take it, so then your total spent is $80,000. So your proportion of payroll to other is 75-25. So you're good. That's what we think they mean. Of what you spend, 75% has to be towards payroll cost. But it's very confusing because it's said one way here and another way and another way. You know, they go back and forth between, do they mean 75% of the total loan or 75% of what you spend has to be payroll? More to come on that. I'm not going to get into the minutia of this. There is a rounding problem. Basically, they said, oh yeah, you can round up in this case. The last pitfall is if you don't spend the full amount. You've been given 2.5 months of payroll to be spent in a 2-month period. Especially if your business is down, that's not going to be easy to do. Even if your business is steady, you still have an extra payroll cycle that needs to be spent. You've got to do projections and stay on top of this and know where you are as you get closer and closer to the end of that 8-week period, not after it ends. We are considering, you know, we're asking you to consider paying staff that have not been able to work due to COVID, right? Due to lack of work, pay them. Pay hazard pay to your frontline workers, to even your office workers. If, you know, even if they're working remotely, right? You can pay extra pay for these people to step up and not go try to claim unemployment. You know, be careful. It does have to be for, you can pay them whatever you want. There's no restriction to how much you can pay somebody as long as it's under that 100,000 annualized cap. You can pay a hazard bonus. You can pay any kind of bonus. We recommend you call it a hazard bonus. We recommend you call it hazard pay. Couple of things. A, look at the PR you could do if that's how you like to do PR. Yeah, I got a $100,000 PPP loan and I gave out $30,000 in hazard pay bonuses for my staff. You know, I mean, that's good PR. Look at what your employee loyalty that you can buy with that. We know a lot of our clients are wanting to pay this. That's how I recommend you use up that additional pay. I do recommend that you wait until the end because depending on your workload, if you've still got people not meeting their full regular workload, they may need to be paid to get them up to their average so you don't lose forgiveness. And we could call it a bonus, but maybe we might want to phrase it a little bit different. I think there's planning that goes into that, and I don't have time on a webinar to go into all those to that much detail. We also consider running an additional payroll at the very end of your 8-week period. You can offer retention incentives to get people to come back to work from unemployment. So right on time, I'm jumping to the next topic. Paul, do we have any biggies on PPP that we need to answer? And don't forget you're on mute.
Sorry about that. It says, one says, all the spending sounds great, but what if the FTE count is still low? How does that play into the forgiveness equation?
So I think that's a very good question. You got to get it up. The FTE is going to limit you if you don't get it up. And so and it depends on what kind of business you are, but I'm going to assume, let's just assume it's home care. I think you need to run the numbers and look at, would it be more advantageous to pay a person that's not working and so you can count them as an FTE and not lose the forgiveness for that piece or 2 or 3 people? That's what it's there for. The intent of the relief is to pay people even if they're not working. So that's where there's a lot of planning to be done. What else, Paul?
Let's see. For the 75% of total wages, what period is to be used? Is it the same period that you chose for FTE headcount or first quarter 2020?
Repeat the first part of the question.
For the 75% of total wages, what period is to be used?
It's going to be the same. I think it's going to be based, and I'm sorry, I kind of skimmed over that. I think it's based on the first quarter wages or the most recently ended quarter wages. And there's rules about part-time, how you just figure their average weekly, number of hours or average weekly pay. So that's going to be based on that past quarter, the most recently, it's going to be first quarter before all this broke out is what it is.
Okay. Another one, what is wrong with funding the payroll directly from the PPP loan account?
Okay, here's why. Because they mentioned the F word, the big F word. Because the act reads that if you spend this money on anything that is an unauthorized expense, it can be charges of fraud. I don't like that. I don't care how aggressive anybody is. And the reason why that could be construed as fraud is because when you fund payroll, you're funding all of your employer taxes. You're funding anybody that's over the $100,000 limit. Now, if you do your own payroll and the only thing that drafts out of that account is direct deposit, and it doesn't include nobody's over $100,000, and you can just guarantee nobody's paid mileage, there's nothing in there, then okay. But even then, if it's just drafting net payroll, that's not right because you want gross payroll. So I just don't think it's very clean to do it that way. And if you're on a payroll service where they draft your taxes, it's absolutely not allowed.
Okay, here's another one. If we establish an employee retirement plan now, can we use it towards forgiveness?
If you do what?
If you establish an employee retirement plan now.
You might have to get some real specific help on that because I don't know if it had to be in effect at 2/15 like everything else. So I don't know that off the top of my head.
If the FTE calculation is a 30-hour week per week employee considered to be full-time?
It doesn't matter. It doesn't matter if you use 30 hours, 32 hours, 40 hours, as long as you use it, that's the denominator. As long as you use the same denominator for your baseline calculation as you do for your current calculation, then you're only concerned about the change. So you just got to be consistent on how you calculate it. We're all saying 40 hours because 40 hours is typically full-time.
So just want to clarify on forgiveness. If we borrowed $100,000, we spent $80,000, would the 75% of payroll costs apply to the total of the loan or just the money spent?
Well, that's what we're waiting on guidance. That's the confusion about the 75% rule. My reading and kind of collectively, we CPAs feel like it's 75% of the amount spent. So 75% of your 80,000, which would be 60,000. But there are many places in the interim final rule that actually says 75% of the loan. So we don't know. That's the big confusion on the 75% rule that we're waiting on.
One says, I have read the Federal Register that owners cannot be included in the loan forgiveness numbers. Is this true?
It's going to depend on what kind of organization you are, but if the owner is on as a W-2 employee, such as a C Corp or an S Corp, there is no stipulation for that.
The next one is, what happens if someone went out on medical leave?
We'll get to that later. They can be covered under the Emergency Medical Leave Act, but then those wages have to be excluded from your PPP forgiveness calculation. And I think they still count in your FTE because they're still on payroll.
Okay. On headcount reduction, what if we have had a nurse that resigned?
You got to replace them.
What date is the rates we need to maintain based on?
Huh?
Yeah, that's from Lindsay. Can you send that again? Exactly what you were meaning?
And then I'm going to go ahead and move on.
Okay.
So I'm going to jump into idle loans. Some of this starts getting a lot quicker until we get to that Emergency Paid Sick Leave and Family Medical Leave Act, which I left till the end. And I just studied it all, so it's really fresh on my brain. It's super confusing. Economic injury disaster loan. What I want to touch on here is I don't know that it's necessarily still available. This is where you went on to SBA directly early on and you said, yes, I want a $10,000 grant, or, you know, I'm interested in an idle loan, and they say, do you want a $10,000 advance? Yes, I do. Thank you very much. Here's my banking info. And everybody started kind of getting these $10,000 grants up to $1,000 per employee, up to 10. So what this was designed for is it's not a loan eligible for forgiveness. It's straight through the SBA. It's for businesses, nonprofits, 500 or fewer employees. It's a lower interest rate, and they're coming in at like 3.75 up to 2 million for deferment, interest deferment up to 4 years, but the loan could be up to 30 years in length. It's available to pay any expenses that you could have met had the disaster not happened, including payroll and other operating expenses, except not what you're paying with your PPP. So maybe if you get that loan, you hold it until your PPP is spent, and it helps you cover your remaining PPP. So it can't be used for the same purpose, same time frame that you're using a PPP loan on. I wanted to bring these up because people have started seeing this money. And it's been a few weeks now that people got these little deposits. Again, $1,000. At first it said $10,000. Then they changed it to $1,000 per employee up to $10,000. The advance doesn't need to be repaid. However, if you also got a PPP loan, that advance will be subtracted from your forgiveness. Let's say you have a $100,000 PPP loan, you spend it all, you meet all the requirements, you get 100% forgiveness, so you're expecting $100,000 forgiven. Because you received $10,000, you're only going to get 90% forgiven on your PPP loan, and you're going to have to pay back the other $10,000. But in total, you received $110,000 and you got $100,000 forgiven because the grant you didn't pay back, and then you pay back $10,000 of your PPP loan over that 2-year period. So what I wanted to point out here, as of today, these idle loans are starting to roll out. So if you got that money, the 10,000, 1,000, 3,000, if you got that a few weeks ago, watch your email. They are starting to send those out saying, hey, we got your inquiry. We know you were interested in an idle loan. You qualify for an amount from 0 to 150,000. How much do you want? And then when you complete that, that is when you're actually applying for that loan. And so I just discussed this, that the forgiveness will be offset by whatever you got on the advance there. Now, if you decline an idle loan and you didn't do a PPP loan and you got a $10,000 idle grant, it's a grant. You just get it. You don't have to pay it back or anything. Okay, still trying to get back on track. I'm a few minutes behind. So Provider Relief Fund, AKA the HHS Stimulus payment. This is the money that started coming in specific to Medicare providers. And I hate to make light of it, but most of us were not expecting this money, probably because out of 880 pages, the PPP loan took up the first 100 pages, or really only about 60 pages. And it took an army just to decipher that, and that's kind of about as far as we got. But even TAC didn't see, well, not that they didn't see it, but we hadn't had any guidance until on 410, everybody started getting these payments and asking, what is this? This was money set aside by the CARES Act to provide direct relief to healthcare providers. So if you billed Medicare in 2019, you got a proportionate share of this first distribution. If you got a first distribution, then you're eligible for a second distribution out of the general fund. But most home care and hospice providers did not qualify. So the first distribution was based on your 2019 Medicare billing, and it gave you a formula. It was very straightforward. The second distribution was based on your entire net patient revenues. It was designed and added, or it came out because it wanted to pay more to those that don't have a high proportion of their payments coming from Medicare. And so like our nursing homes typically got a second payment. However, like a home care hospice, that's a very heavy Medicare provider, when they did the second calculation, it showed they would have owed money. Well, then that was concerning. And so HHS did come out last week in writing, and they have clarified they will not recoup if you were, quote, overpaid in the first distribution. And I want to use that term loosely. If you do the calculation for the first distribution and you came up with $200,000 and you were paid $2 million, you were legitimately overpaid and you need to find out how to pay it back. If you calculated $200,000 in the first distribution, and then you go and you do your second distribution calculation, and it says negative $75,000, they will not recoup that. If you were paid the 200, you calculated 200, you're paid 200, and then the second calculation, it shows you were overpaid, they won't recoup that. So that's the difference there. There should be some help coming for the Medicaid providers. It's just taking a lot longer to get here. TAC actually issued a letter up to Governor Abbott this week. I think it was this week it went out, asking them, please expedite this, let's get this going. CMS did come out and say that there were no strings attached to these payments, and that's absolutely not true. Absolutely not true. There are a lot more strings probably than what the PPP loan has. You do have 45 days of receipt in order to sign the terms and conditions, and that has been extended from the original 30 days. If you do not sign the terms and conditions, you are by default signing them. So By signing them, you're accepting the money. If you don't want the money, you have to go reject the money through that portal, and it's all on the HHS. If you just Google HHS stimulus payment, there's lots of information that you can find that says how to return it. The terms and conditions are very vague, but they say they must be used for, the money must be used for COVID-related expenses or lost revenue. And it says, quote, to prevent, prepare for, or respond to coronavirus, and shall reimburse the recipient only for healthcare related expenses or lost revenues that are attributable to coronavirus. It further goes on to say, if you receive more than $150,000 from any and all relief programs currently available, then you're going to be required to do quarterly reporting. I did see somebody, and I want to say it was kind of some big national names, like maybe Mark Sharp, BKD, Aaron Little. I might be wrong. And I was also listening to Rob Simeon. They interpreted that to be only from this payment, but the way I read it, it clearly referenced the CARES Act, the Families First Corona FFCRA Act. I take it to be all acts. And so this basically puts almost everybody, if you got a PPP loan and this payment, you're going to have to do this quarterly reporting. I could be wrong. And so you've got allowed expense, allowed uses just are not very well defined. I feel like, and most professionals, again, those I've been listening to and following, you know, myself, Steve Tellis, Mark Sharp, Aaron Little, Rob Simeon, Bill Dombey. I'm not trying to just name drop. I really did listen to him. The allowed expenses and allowed uses just aren't very well defined, but we are all interpreting healthcare related expenses. Since you are a healthcare provider, pretty much anything you do is a healthcare related expense. So related directly to and incurred because of coronavirus. I've heard some really creative uses. I've heard some very, very aggressive uses. And I think people need to be a little bit cautious until we know how this is all going to play out, until we get more information and more clarification on these. Replace lost income, that's a lot easier to calculate. I think. At first I thought that was the hard part, and now as we start digging into it, I find that's going to be easier. What you want to do is you want to find a way, and you know, I don't care if you put it on a tablet or, you know, a notepad, but preferably a spreadsheet, but you want to document these things. Lost revenue. There are two things. You can either just look at, and I don't prefer this method, but you can compare your revenues to this time last year, April through June, February through June, or you can, and compare it to this year, or you can actually do like hardcore documentation, because you know if somebody was discharged due to COVID, you should know that. Flag it, note it, stamp it, document it somewhere. So pretend you've got or create a spreadsheet, have a tab for discharges due to COVID, have a tab for LUPAs due to COVID, have a tab for non-admits due to COVID, have a tab for lost referrals due to COVID. And if you don't know what maybe your revenue would have been from that patient that you didn't even get to admit, maybe you use your average HHRD. Maybe you know that typically we keep people on for 2 cert periods. Maybe you're hospicing, you know your average length of stay is 60 days. Anything that you can do to fully document, okay, our daily rate is this at this many days, which is on average how long we keep a patient, blah, blah, blah. Like put it in there. Discharges. If they were discharging, you know what that HHRG was, document it. If they were discharged and they had, you know how many more days they would have been on service on hospice, document it. LUPAs, super easy. They were already on service. They got LUPA'd. You know how much payment you missed out on. Just document it and keep track of everything. Additional expenses. This is where everybody's getting super, super creative. And I love hearing the ideas. Definitely any expense that you can directly attribute to COVID, document it. I keep visualizing back in the day when we're very paperless around here, but you know, you had a little stamp that was like posted, you know, you could stamp it. I just want to stamp things with COVID. And so we kind of are. We're asking our clients, if you've got a COVID direct expense, we need you, just email us, because we pay a lot of bills for people and we record things in their QuickBooks. Let us know, and we are categorizing those to COVID expenses. We're very, very specific. We have a whole separate chunk in our general ledger. Like, we don't want just, hey, these are all the COVID expenses. We want COVID legal, COVID accounting, COVID medical supplies, COVID, you know, whatever it is. So some examples are absolutely all of your PPE, and you can stock up on it, and sanitizers and cleaning supplies, janitorial services if you've upped that, overtime wages for staff that are covering other people they're out due to quarantine or what have you, additional professional fees. So like any of our fees, because we are having to charge extra for all of this work because there's so much that goes into it. Our additional fees are legitimate COVID expenses. Legal, HR, if you had to hire a consultant to update your EPP plan, your emergency preparedness plan, any additional hardware costs to enable people to work from home, any additional software costs from telehealth, anything to set you up from work from home. If you had to update your internet to be able to handle everything, if you had to all of a sudden put your server in the cloud or set up a VPN and it costs you extra money to do all that, if you can say, I did this because of COVID, because of coronavirus, then it, as our interpretation is, it qualifies. But you need to document it. And you know, maybe you decide that you're going to implement, I don't know, maybe you decide your billing software, just sit and concatenate your EMR software, and you want to go with a new one, and maybe it's got a $10,000 down payment or something. You know, if you've got some kind of big expense like that, you know, have a board meeting or have a meeting of managers and just document it. Say, hey, we're reviewing this. This isn't working for us. We're going to spend the money to go upgrade to do this. And, you know, maybe if it's just directly replacing the one that you already had it planned, don't be that aggressive. Another thing about this fund, this is set to be, this could last for a long time. There is no time frame set. There's no 8 weeks that you got to spend this. This is there to be a savings account to cover these things as they happen. As you experience the lost revenue, and maybe you haven't had a lot of lost revenue just yet, but it might come later. So some people are questioning, do I even want to keep this money? I mean, I think they gave it to you for that very reason, right? So you are going to have expenses that you can justify spending this on, or lost revenue. So you're going to have quarterly reporting, as we mentioned, and that dadgum report, supposedly, I'm waiting for a change on this, is due 10 days after the close of the quarter. That's going to be very difficult, especially since we have no guidance yet. And that's supposed to start in July. It's supposed to start with second quarter reporting. We have no idea what that looks like. Don't even ask that question. I can't answer it. We don't know what they're looking for. We don't know who to report it to, other than the secretary of HHS. Pretty sure we don't have a direct channel to her. I assume we're probably going to report to our intermediaries, being Palmetto. Well, around here it's Palmetto. Document everything, cancel checks, invoices, receipts. General ledger on its own, not going to be enough. We're also recommending putting that in a separate bank account. So moving on to accelerated payments, because I really am running out of time. Accelerated payments, advanced payments. I just threw this in here because it is something that you do have the some people did do this. You could request 3 months worth of 100% of your Medicare reimbursement for 3 months in an advance payment. Just be cautious that this is 100% you've got to pay it back, and it starts in 4 months. So they give you the money now. In 120 days, they start recouping. By day 210, if they haven't recouped 100% of it, then you got to apply for an extended repayment plan. Again, let's this next slide goes over those dates again. What that means is, yeah, you got a lot of money now, but that means you're going to have like very, very little money once they start holding your payment, because it's 100% recoupment. This isn't going to be a 20% recoupment or something like that. They're going to recoup it until it's paid back. And then my fear is they're basing it on 3 good months, right? So that's going to be a big payment. What if after 4 months, it's hit you a little bit harder, and what if your census is down 50%? You're going to have a payback. So I have heard talks that they may be allowing some more favorable terms, especially with regards to interest on the extended repayment plan. Again, nothing formal. It's just kind of rumors circling around. Okay, this is the last biggie that I want to jump into, and it is this all came out in the first act, which was the Families First Coronavirus Response Act, FFCRA. And both of these fall under this act. And I think actually that first one is titled wrong. I think it's actually Expanded Family Medical Leave Act and Emergency Paid Sick Leave. So they all are, you know, employers with 50 or 500 or less employees. There are some exemptions that I want to note, because this healthcare providers obviously jumped out at me. You are exempt, healthcare providers, emergency responders, and small businesses with fewer than 50 people, if it would jeopardize the viability of your business, are all exempt. You are not required to offer this. However, you can offer it. I've yet to find anybody that did not want to offer it. And there's a reason, because there's a government tax credit if you do. So we'll get to that at the very end. So covered employers and eligible employees, public and private employers with fewer than 500 employees, healthcare providers, yada, yada, I already said that. It gets complicated. Employees employed for 30 days are eligible for an additional 10 weeks of family paid. So all employees are eligible for the paid sick leave. Only employees that have been employed for 30 days or more are eligible for the additional 10 weeks of paid family leave. And there are some stipulations for federal government employees. They're not covered under the extended family medical leave, but they are covered under the emergency paid sick leave. And I only put that in there, actually I started not to. There are some people in our midst that are county-owned hospitals, and they're government employees. So under this, there are 6 qualifying reasons, and this is what I want to work through. An employee qualifies for paid sick time if the employee is unable to work or telework due to a need to leave because the employee is subject to a quarantine. Now, I didn't have time to really dig into this, but this does not include, it says federal, state, or local, but I don't think that I know it doesn't. It does not include the city of Austin, you know, saying that we're under quarantine and everybody needs to stay home. It is more of a specific, this individual has been specified they have to stay home, or have been advised by a healthcare provider to self-quarantine, or they are themselves experiencing symptoms and are seeking medical treatment or diagnosis, or they are caring for an individual that's quarantined, or they are caring for a child whose school is closed, school or place of care is closed, or they're experiencing any other substantially similar conditions. This is so confusing to me. Then they can also qualify for expanded family leave if they meet number 5. Okay, so they can do all of these 1 through 6 qualify for sick leave, but then number 5 qualifies for this extended family leave. Okay, let's dig into it a little bit better. So for reasons 1 through 4, and I'm sorry, that's basically you're quarantined or you're sick. Full-time employee is eligible for 80 hours of leave, and part-time employees are eligible for the number of hours that they typically work on an average over 2 weeks. So if they're part-time and they typically work 30 hours a week, then they're eligible for 60 hours. And then for reason number 5, the full-time employee is eligible for 12 weeks of leave, which is made up of 2 weeks of the paid sick leave above, plus 10 weeks of extended family and medical leave, up to 40 hours a week. Then the part-time employee is eligible for basically the same thing, but based on their average hours per week, up to 12 hours, up to 12 weeks. Now, the calculation of pay. So if it's for reason 1, 2, or 3, and I wish I had back up on my slides, but that is government quarantine, self-quarantine, or let's go back, what's 3? Is experiencing COVID. Hold on, I'm sorry. Yeah, or is sick themselves. They get 100% of their regular pay as paid sick leave, and it is capped at $510 per day up to $5110 for a total over 2-week period. If it's reason 4 or 6, then they get 2/3 of their regular pay, which is up to $200 a day with a max of $12,000 over a 2-week period. That does not make sense. Well, it is capped at $12,000. And the reason is because of this extended, I need to make sure that number is right. I'm sorry. I'll update that in the slides and I'll put it in the email, my clarification on this right here. But reason number 5, which is caring for a child because their school or childcare is not available, you get 2/3 of your regular rate over a 12-week period. Okay, so it's 1, 2, and 3, you get 100% for 2 weeks, and then 4 and 6, you get, as I read it, an additional sick leave, but only, not additional, but you get only 2/3, because basically you're taking care of somebody else, is how I read it, as sick leave. So I'm a little confused on there. I need to clean that up. Now, here are some special considerations. And I don't know why it kind of cracked me up that the government had to put this in here, but because we as employers have to make sure this is in our policies too, and so I found it interesting they had to put it in this new act. Paid sick time does not carry over. Under this act, it does not carry over from 1 year to the next. Employees are not entitled to any unused leave. An employee may elect to substitute any accrued vacation leave or paid leave for those first 2 weeks under this paid leave section. I don't know why they would, but, and the provision applies, this was a biggie. How far back retroactive can we go? Not very far. You can pay this back to 4/1, but you can pay it all the way through the end of the year. Now, why would you want to pay this? Wait a minute, I may not be done with these. Oh, the employee, and it can't just be, oh, I want to self-quarantine because I'm scared of getting sick. It cannot be that. They have got to have it in writing that they've been ordered to quarantine, either from the government that issued it. That's why I know it's not like the whole city of Austin is under quarantine, so therefore you get paid this. It's a very specific quarantine for that person, or the healthcare provider. I do want to flag you here. Yes, you as an employer are in the healthcare industry and you are a healthcare provider, but you are not your employee's healthcare provider. So they can't come to you and say, hey, I need to be quarantined. Can you write me a doctor's note to be quarantined? So you need to be a little bit careful there. You got to have this stuff documented because it will be looked at. Again, paid sick leave can't be retroactive prior to 4/1, and health coverage must continue to be paid, both the employer piece and then the employee has to pay their contribution too to keep it in force. This next slide is kind of maybe a little bit hard to read on your screen, but I included it because I want you to have it. It's a nice little flow chart to go through and figure out who qualifies for what. I'm not going to go through it right here. What I want to get to are these tax credits. So when somebody takes that paid sick leave or extended family medical leave, you as the employer, you have to pay that payroll. However, you get a dollar for dollar credit on your next tax deposit. You get a credit for the amount of wages paid, but you also can claim a credit. Now, the functionality of how this happens, I don't know. I don't run a payroll company anymore. Thank you, Jesus. But you can also include the cost to continue the healthcare coverage for the employee on leave and the employer's share of Medicare tax on leave. Now, I'm pretty sure the employer's share of Medicare tax, the payroll system's going to pick that up. If you are, God forbid, manually calculating payroll, A, go find an outsourced payroll company, but B, make sure you're getting this right. If you're with an ADP of Paychecks, our clients use iSolved or Payroll Vault or QuickBooks. You know, and I think QuickBooks has their stuff up to date. Gusto, I'm sure they all do. They're doing this for you. The thing is, you've got to set up a separate pay item and well, they need to set it up for you and tell you what pay item to use to make sure that you're getting this credit. And you want to watch it, make sure it's working right. Because I don't know for sure, but I feel like when it first came out, like I don't think ADP's was calculated right. So if you pay somebody $1,000 a week, they're quarantined, you pay them $1,000 on this paycheck, you should then on that tax deposit get $1,000 credit, meaning your tax deposit's that much less. If for some reason you pay a lot of that out and it's more than what your tax deposit is, there is a way for you to request a refund from the IRS to be credited that, to get that money refunded to you. Again, get with your payroll company and your payroll provider on those details. A little bit more. If you've got a PPP loan, you need to understand that, yes, these can be worked together, but those wages cannot be used. They've got to be excluded from the payroll paid when you go to figure your PPP loan. And that goes into each piece of it. That goes into your 75% rule. That goes into your FTE count. Well, I mean, we're still going to count them in your FTE. It's not going to hurt you there, but the wages cannot be calculated as part of your forgiveness. So you got to make sure you exclude those out. As a planning opportunity, I think it's wise to go ahead and pay those out, take the credit. It gives you more PPP money to spend if you have people that you want to bonus and get that money to your workers who are stepping up and handling patient care in the face of, you know, scary times. Again, you cannot double dip on these. Getting to the end, so the provider relief, this is what we know now. The provider relief fund terms and conditions, that's a big reporting requirement. As soon as more information comes out, we'll start putting it out there. I highly recommend that you go follow us on Facebook and or LinkedIn. We're trying to push out information that way. And if you get tired of my voice, because I know it's real raspy and scratchy, but you know, some of it, there's so much information. I'm just doing quick videos and posting them out there because it's a lot to write down. And so, you know, people are lazy and we don't like to read, and I like to record little messages. Managing each of these fund sources separately is going to be an accounting mess. We're doing our best. We've got some guidelines set up internally that we're doing with our clients. You need to make sure you're working with somebody that knows how to do this. I'll get to that in a moment. You got to be real specific. This all has to be done now, even though we have very little guidance, right? So like, I don't know how to instruct you. All I can say is be overly cautious and over aggressive on your documentation and document everything you do. And if in question, write a memo about why you did it that way and put it in the file. And again, you want to just plan, plan, plan. So what's next? Again, just you need to understand these programs, and you need to know what you've applied for, and you need to know what you are receiving as far as funding, so that you know all the compliance and requirements that goes with each one. Even though I'm, you know, maybe I'm your hired professional, it still lies on you. It is your responsibility to make sure that you understand this. Now, maybe you come to me to understand it and I'm happy to guide you, but I need interaction with you. You need to be interactive with your professionals to make sure you're really understanding it. And if not, just keep asking questions. You also want to understand, how is this? So you got COVID reporting compliance. Now you're going to have cost reporting compliance. You're going to have income tax compliance because some stuff's not going to be deductible. How are they going to want it reported on the cost report? We don't know yet. I highly recommend you seek a professional if you don't have answers to these. And one thing I want to do is, thank you for joining. We are definitely here to help. This is what we do, and this is all we do. We only represent and work with home health, hospice, nursing home, assisted living. That's it. Okay, granted, we got some people got some farms and some ranches, but they also own a home care agency or in a nursing facility. This is all we do. We know this stuff inside and out, and you deserve to work with somebody that knows that. And if you've got an accountant and you're having to come to me for help, I'm challenging you. Why? Why is your accountant not stepping up for you during this time when you need it the most? And I've had reports of a few and many really, and you know, I could have made the choice to bury my head and say, oh, that's too much work and somebody else can figure it out. I didn't do that. I put the entire firm on hold. Cost reports are getting done at night and on the weekends. I've divided the team. We got half working COVID. We got half working maintaining our monthly client work, and everybody's working overtime, and we're getting it done, and we're happy to do it. And I've gotten so many thank yous, and it's been wonderfully fulfilling for me. But I just feel like you need to know that there is somebody out there that will handle all of this with you and be there in the fire with you. So I'm here for that. Let's open it up to some questions. What's funny is I am right on time according to my little time schedule, but we won't get cut off. Paul and I will stay here until questions are answered. And again, we'll send out slides. I will clarify that one I had a question about 2 weeks, but $12,000, that didn't work on the emergency paid sick leave. And you'll get everything in follow-up emails. I've got it set to go out in 2 days to give me time to get it ready. So Paul, what do we got? You're on mute. He has puppies in his room, in his office. Okay.
Yeah, little chihuahuas. The first one says, I received $10,000 as an EIDG, not EILDL. Is it a grant? I also received a PPP.
Okay. IEDG and IEDL are the same thing. There's just, at first they were calling it an advance on a loan, then they called it a grant. It's a grant, but if you receive the PPP also, that $10,000 will come off of your forgiveness. And the fact that you got that means they're going to follow up and ask if you want a loan. So you're going to want to kind of look into that. Do you want the loan or not? And that's how that works.
Okay, next one is, if you pay a PRN nurse an extra amount due to her having lower visits, say you pay her $1,000, can we use an equivalent hours to help out our FTE count? I would think no, since it's hours work, but we're debating this.
Okay, this is why in the earlier slide, I said I think it would be smart to set up a COVID missed visit item and put the number of visits, because then to me, you're good. I think it's wiser to do that so that you do get those counts into your FTE and still, so like if it's $100 a visit and they miss 10 visits, you know, you've got a unit of 10 at $100 a visit. And that's what I would do. And that's totally auditable because they can look at how it is now, compare to what it's been in the past, and see, you know, it's not that you're paying her extra just to get your FTE count up. You're paying her for what she's truly missed out on.
Next one is, if an employee resigns during the PPP period because they are moving out of state, would that written resignation be sufficient to remove that loss of employee count for forgiveness?
No, because they're going to expect you to replace that employee.
what is the FTE in the original regulation for PPP forgiveness, or was the regulation revised? I don't remember calculator FTE in my original request for PPP.
Right. So you didn't. You're right. The number that you put on your loan, a lot of them said employee count, which is not the same thing. And because we had no guidance then, that number doesn't count. And so what they're looking at, because they've given us a little bit more guidance, is they're looking at either 215.19 to 630.19 or 1/1/20 to 2/29/20. You're going to pick one of those periods, calculate your FTE, and that's going to be your baseline. So what you put on your loan application is not, it did change since then.
Here's someone that says, how will this play out for independent contractors that receive PPP but don't have a payroll of their own, but receive a 1099 from their employer?
Okay, I don't have time to go into it. I did a whole presentation just on independent contractors, which is on our YouTube channel, but independent contractors are gonna, you have to understand there is gonna be zero chance of 100% forgiveness. And it's a mathematical equation. What they're doing is they are gonna take your 2019 1099 wages, divide it by 52 times 8, and that's all you're going to be able to claim for forgiveness for payroll wages. Okay, so easy example, $100,000, no, $52,000 on your 1099 last year. So you get $1,000 a week. So you're going to get 8 weeks. So you're going to get $8,000 is what they're going to allow you to claim as payroll cost for PPP forgiveness. Well, based on the loan amount that you got, which is going to be 13 weeks, the math doesn't work out to where you can spend 75% and 25%. There comes to be a fraction that you're not going to have forgiven. It's just a mathematical equation. So you can do the math, but what they've said is, and they're fairly clear on this, take 2019 1099 or Schedule C income. So whatever your Schedule C income is, divide it by 52 times 8. That's what you're allowed to claim as payroll for your PPP loan. How do you document that? I don't know. You're going to have to get with your bank to see how they want that documented.
Do we need to apply for the second round of the stimulus, or is it automatic?
So it's weird. You don't apply for it technically, but if you received payment 1 and you did not receive payment 2, then you want to go into you want to get the formula, which I'm sorry I don't have, and see what you qualify for and see if you qualify for money. If you do, then you've got to go into their portal. And again, it's on the HHS stimulus payment frequently, it's on their page, Provider Relief Fund page. You go into their portal and they're going to ask for your tax return. They want your most recent tax return. And what they're saying is, if you didn't get a payment, but yet you think you qualify for a second payment, then it means that the information on your cost report is not accurate, and we need more accurate information. And the button on that page actually says submit cost report. I find that a little weird because as far as I know, they're actually asking for your tax return. A lot of 2019 cost reports are not yet filed. So what they're asking you is, that means we don't have good revenue numbers on you and we need you to submit good revenue numbers. I haven't had anybody do that yet. Okay, what's next?
If a nurse is doing a normal amount of visits, can we still do a COVID bonus? And if so, what is a good average on it?
So you can absolutely do any kind of COVID bonuses. I highly recommend you call them COVID bonuses or hazard bonus or something like that. And that's even if they're getting their normal paycheck, then, but I don't have any, I can't give any guidance on what a good average is. You know, you can't pay anybody more than $15,385, and depending on how much they already get paid during that 8-week period, that will kind of factor into that. But you know, that's completely up to the agency. So what's nice, and this is coming from, if you're a PAS agency, like and you participate in the STARS program and rate enhancement, not STARS program, but the rate enhancement program, you're used to having a lot of stipulations on the bonuses you can issue. There's no regulation like that. It can go to any worker. It doesn't have to be field staff. But again, $15,385 is the max.
Okay, next one says, I'm an owner administrator. I have not been able to collect a paycheck so I can cover staff. I do member disbursement. Can I pay myself during these 8 weeks? Sure would be nice to get paid again.
My first thing would be, did you used to pay yourself in the past, even before all this happened? And if the answer is yes, I would absolutely put myself back on payroll. And so I think you should take payroll before distributions for sure.
Let's see, what about valuing management time spent looking for available PPE or during doing staff training or doing testing?
So that's a really good, what we're calling a soft cost. It's not very tangible, right? It's kind of intangible. You're absolutely right. And that's like the life I'm living right now. I'm doing so much work, but so much of it is not billable because I'm doing webinars and I'm doing education and I'm doing, research. So same thing for you, right? If you wanted to include part of your salary as that would qualify under your HHS stimulus payment, you would have to do some kind of time study. And I would do like a 4-week time study. And you would have to log your time all day, every day on what you were doing, so that then you can say, okay, I quantified that 20% of my time I am doing COVID research, COVID dealing, COVID PR, dealing with the doctors, trying to get them to sign their notes, outside of more than what you usually have to do. I think that's legit. But I think if you're a salaried employee doing that, you have to do a time study to justify it. If you are, maybe you're per visit and you're saying, hey, I'll step up and I'll do all that work and I'll just pay me an hourly rate. That is super clear. COVID research, make it a separate pay item. I want you to be able to track this stuff. I think that's a completely legitimate expense for your HHS stimulus. Again, remember, if you're under PPP and you pay somebody for COVID research and you're using PPP dollars to pay for it, you cannot also use HHS stimulus money. That's why I say this is going to be an accounting nightmare. What else?
Our attorney stated that since we are an exempt business, if we do not give EFMLA, we do not qualify for the tax credit. So
Can you clarify that for me, Paul? Can you read them and then just tell me what they say?
As our attorney stated that since we are an exempt business, if we do give EFMLA, we do not qualify for the tax credit.
Right. I don't know about exempt. There was no clarification in there about exempt being tax exempt. I don't know the answer to that. I would stick with what your attorney advised you.
It says, what if employee have to be self-isolated due to potential exposure to COVID-19 from a patient?
So that qualifies for that emergency sick pay. The problem is you've got to have a doctor's note. And as a possible exposure, so if you want to pay it under the emergency sick pay, then they need to try to get into a doctor, even if it's televisit, for a diagnosis and be tested, because they have to, basically they have to have a doctor's note. If you don't care about paying that, then you can quarantine them and still pay them under PPP funds. And you don't need any kind of doctor's note for that. And that's kind of a retention thing, right? If you've got the PPP money to do it, they get to count in all of your FTE counts and everything, but it's also a good retention tool. Keep them off of unemployment. I mean, to me, it's worth it to pay it, even if they can't go do visits. I see one that I want to answer, Paul.
Okay.
Regarding health insurance, you said employer portion is eligible. This is the first I've heard of it. That's because the employee portion is gross pay for the employee. So we're already counting the employee portion in gross pay. Is that right? Did I say that right, Paul?
Yes.
Yeah. So what the
Yeah.
employee pays and is withheld out of their check, it's their payroll and then it's withheld out of their check. So it's gross pay. So we're already counting it. So I'm saying it the same way. It's the same thing. I'm probably just saying it a different way.
Yeah, gross wages includes the employee portion.
Yeah.
And we're using gross payroll.
And I will say, Greg, there were some professionals and some bankers have not been good, that stated, oh no, we're calculating net pay. No, you're not. No, you're not. And I've schooled a few bankers on that. We've got it in writing exactly how to calculate, in writing from the government. It's very clear.
Okay, here's one on the tax credit for paid leave. Does it only apply after the employee has used their existing PTO?
No, I did read that. They do not have to use their existing PTO. And you'll probably kind of get too deep for some, remember that this tax credit, this is a payroll issue. And I really wanted to put it out there, and I wanted to give you enough guidance for you to think about it, but you really need to get with your HR and payroll team on that. So I'm not going to go too deep into answering too many of those questions.
One says, so if we pay $3,000 for the first 3 pay periods and $6,846 on the 4th pay period for a total of $15,846, would all be allowable?
It would, but the number is 15,385. So just make sure you do the math right. But yeah, it doesn't have to be paid evenly over time.
If someone is on unemployment, can you still pay them and claim for 75% payroll or under take care of their children because of no children center open? So basically, can you be on unemployment and get paid at the same time? I think that's what they're asking.
So that's fraud, but it's fraud on the employee side. And the TWC, Texas Workforce Commission, so whatever your state unemployment commission is asking for you to report those. And basically, if they have a job and you're paying them, they are not eligible for unemployment benefits.
Can we convert our 1099 folks?
No, don't even ask that question. There's going to be a whole nother topic about 1099 contractors, and it's already starting in my head. You cannot convert them to W-2s because here's the deal, people. You don't get to choose if they're contractors or they're employees. There is a test that you're supposed to go through, and they're supposed to qualify, and you're supposed to answer all these questions, and they either are one or they are another. And so you are putting yourself at great risk, especially if you put them on W-2s, and then after 8 weeks, you put them back on 1099. You're just asking for a TWC, an unemployment audit, which then goes to a federal unemployment audit, which then goes to a benefits audit, because yeah, it's bad. So no, you can't. Sorry, that was a little aggressive of me.
If someone makes more than 100K, only 100K goes towards the PPP forgiveness. Can the remainder be accounted towards the stimulus?
Not unless, I mean, just paying wages under stimulus that's not an additional expense. So you'd have to, now if you had lost revenue, you could pull for lost revenue to pay your additional wages, but just paying wages out of HHS stimulus is not one of the reasons that we see that would be eligible for HHS stimulus payments.
Can a provider, HHA or PAS with 500 or more employees qualify for the PPP loan?
You can. Again, you're going to want to get with the bank on this because the bank is handling PPP loans. There are some exceptions by the SBA that if you, and I can't quote them anymore. I did a few weeks ago, but I've slept since then. If you have like net revenue less than 15 million or something, there are some stipulations you could fall under some other reasons that you would be considered, quote, a small business. Get with your bank and see if they can explore that with you.
How about cell phones and HIPAA certified text software like Tiger Connect?
For what?
I guess PPP.
Well, cell phones are definitely on PPP. I'm not sure what Tiger Connect is. I bet it's some kind of security software.
Yeah,
Again,
HIPAA certified text software.
I don't think software qualifies. Now, if you had to implement that due to COVID, but if you already had it, I don't think so.
Okay. Can you please review the FTE calculation?
Okay, so what you're going to, you can do, like I said, last year, February 15th to June 30th, or this year, January to February. Let's just say this year, January to February. You're going to take your total payroll hours paid for that 2-month period, and you're going to divide by number of work hours in that 2-month period. So just easy math to me is 40 hours a week. Let's just pretend that's 8 weeks. So whatever 40 times 8 is, yeah, Paul and I don't do math in our head because we're CPAs. It's dangerous. 320. So 320 hours. So you would take your total payroll hours divided by 320 hours. Now, do not quote me on that. I did not count the work days on the calendar, but you want to go count how many days are in that period from January 1 to February 29th. How many work days were there? And that's typically going to be weekdays, non-holiday, business days, but 8 hours a day. So you're going to take your total payroll hours paid divided by that number, which should be somewhere around 320 hours. That is how you calculate an FTE. So then at the end, let's hope and pray it's the last payroll of your 8-week period. You would take, say it's a full 80-hour pay period, you would take your total payroll hours paid divided by 80 hours. And this is why things are important. Like when you pay somebody a salary, it's important that you record how many hours you're paying them for. So, what else?
Okay. Have you heard anything about PPP loan forgiveness being tied to our income? For example, if we made sufficient income to cover payroll during our PPP period, will that impact our forgiveness?
So I think this kind of relates to the whole necessity talk that had happened. And the government did come out and issue a clarification just this week. So there was this big question, did you need the loan? And people were getting heat. The LA Lakers obviously are worth billions of dollars and have access to lots of capital. Ruth Chris, Shake Shack, some of those Potbelly, they have access to capital. So did they really need it? And did they meet that stipulation of need that they certified they did? The government came out and said, if your PPP loan is less than $2 million, we are going to deem it as needed, which means we're going to default that you needed that money and we're not going to make you prove it. That's a huge relief to all of us small businesses. So unless your loan is more than $2 million, I don't think you need to worry about that. Now, I have not heard talk specifically about what your net income. But I'm watching that because, most of my clients, yeah, some have had a dip, but for the most part, we're not restaurants. We're still operating.
Okay, next one is mileage covered for home health employees? It's not part of gross wages.
No,
on a calendar plan.
It is not, unless only if it's included as taxable wages, which a few providers do it that way, but only if it's taxable wages.
I guess you answered this. They're talking about our exempt employees included. They usually don't have to clock in and out.
Oh wait, exempt employees. Yeah, I mean, but you should still be, if they're exempt their salary, you should be defaulting your payroll to 86.6667 hours if you're on a semi-monthly pay schedule, or 80 hours, or whatever the real hours are in that pay period. You really should be putting that number in. I mean, they don't have to clock in and out, but you're still paying them for 80 hours of work.
Does telemedicine count?
I don't know what it count as what.
Well, I guess count as a part of the PPP loan forgiveness, I would assume, or stimulus. Yeah, I mean, like,
Yeah, I don't know what that, I can't answer that because I'm not sure what it means.
let's see here. I have a PAS agency with a 2-week payroll of 95,000 gross. Can the 95,000 be forgiven amount?
Again, that question's not clear enough, so I'm not sure what the question is. So,
Let's see.
let's, how many are left? 10?
Yeah.
Okay, here's another one from Greg. A follow-up on health insurance. I was understanding that PPP funds would be eligible to pay the entire health insurance premium, both the employee and employer portion. I don't think we are picking up the employee portion in their earning. The employee portion is a separate expense to the employee that they pay via withholding. That's my point. You are picking it up. So if you're with, okay, so if somebody's paid $1,000 and their insurance is $200, and so forget about taxes, after they pay their insurance, then they only get $800. You're picking it up by picking up the whole $1,000 of gross wages. Virtual visit telehealth. So Elsa is asking, telehealth, does it count as a visit? I definitely think you don't get reimbursed by Medicare, but I think you're going to pay the people for it. So if you're paying them for it, then it counts as a visit, as a unit. You know, maybe it's only $20 a unit, or maybe it's half a visit. I don't know exactly how you're going to count that, but I do think you want to quantify it and count it so that you're showing the hours worked.
There's one that says, is the 25% reduction in payroll the total amount of payroll, or is it per person?
Oh, good question. 25% reduction in payroll wages. It's dollar for dollar. So if you had somebody at 10,000 and you reduced them to 7,000, then I think it's going to be, Paul, help me with this. So that's a $3,000 reduction. So it's $500 more than 25%. I think it's going to be a $500 dollar for dollar reduction in your forgiveness. That's how I think it's going to work.
Mm-hmm.
Again, we don't have solid guidance, but that's the best we can figure.
Yeah, let's say we're at week 6 and realize we're not going to make the max pay out of the PPP loan. Should we quickly pay that back, or where do we send it to?
It would be paid back to your bank. That's absolutely up to you. If you can pay it out in bonuses, I recommend that. If you can pay an extra payroll, even if it's just 1 week right there at the end, you know, be sure and explain to your employees what you're doing, because let's say it ends on a Friday and you actually get paid the next Friday, but the pay period ends this Friday because you got a week lag, and you go ahead and pay it today. Pay period ends this Friday. We're going to pay it this Friday, so it's on PPP. Let them know, look, we're paying you a week in advance, which means you're going to go 3 weeks to your next check. I stress this because I know employees can be difficult and maybe they don't understand, and it's not that they're being difficult. They get confused. They don't understand. Make sure they understand this is their check. You're just paying it early. But I recommend that too, because, or even if it's in the middle of a pay cycle and you can only, you know, pay a week of it, I would do an extra pay room right there at the end. But if you don't want to keep it, it'll go back to your bank. And you can do that immediately, because if you don't, it'll start you know, you're incurring interest on it. But there is no prepayment penalty, which means you can pay it off at any time. You know, you might, one thing that we're kind of advising is, because of the uncertainty with, you know, business opening back up and the concern about spikes going back up or whatever, and maybe it hasn't really hit your area hard or at all. I mean, I'm taking kind of a conservative approach. You may want to hang on to it in case you do see a big problem, because this isn't going to come back around. You're not going to get another chance to get money. And so, maybe you hang on to it to make sure you're covered in case there is a big slowdown in business or something happens.
Do owners' health insurance and retirement count?
Say that again, Paul.
Do owners' health insurance and retirement, I guess, contributions count?
Yes, yes.
What's the time frame for maintaining employee wages to make sure it is forgiven?
There has been no answer. They say restore wages, but there's going to be a finite period of time that the bank reviews, which is going to be your 8 weeks. So what you do after that 8 weeks, I don't know if anybody's going to be looking. I'm not sure. We don't know. There's no guidance on that. I'm going to get back to Elsa. I mean purchasing the software for telehealth so that RNs do not have to go out. Yes, that can be an HHS stimulus payment money. Super legit HHS stimulus for COVID expense to go ahead and buy into telehealth.
Okay. Since we have mostly variable hourly employees, is there a link or any reference material on how to calculate their average weekly pay for first quarter to 2020? Or would it just be divide their quarterly wages by 13?
I think it's going to come down to that. There's a little bit of guidance out there, but I think it's basically going to come down to that. And I'm trying to remember because I just read it. And I think that's exactly what it said. Just figure their average over a quarter of what they usually get and use that number.
Can you not use all your PPP loan for payroll?
Yeah, you can use 100% for payroll. That question has come up a lot. And I think it's because of this 25% for other costs. You can use 100% for payroll and none for rent and utilities. If you choose, there is nothing wrong with that. And you're exactly right. That's exactly what they wanted it for.
Okay. If I injected money into the company to cover payroll for March before the PPP loan, can I reimburse myself? And can I count this towards the PPPL or the RF?
No. Now, you may be able to, because you had to inject money, that makes me think you had a loss in revenue. And so the HHS Stimulus Fund, and I didn't even say this, I think you can go back to February 15th to start calculating your lost revenue. So if you can go quantify, back in March, we had a huge dip because of COVID, and I had to put money in to pay payroll. Forget about I had to put money in to pay payroll. You can pull that money over from your HHS stimulus money to pay the company back, which then the company can pay you back. And then something you said, you said to use funds staggered. Is it best to wait until the time frame is up before the next, like PP? So, okay, the question is, should I use PPP funds first and then HHS stimulus, or should I use my own money or the business's money? What we're saying is you can simultaneously use PPP and HHS. However, HHS cannot be used for the same purpose as PPP. So you want HHS to cover everything that PPP doesn't cover. Then once your PPP is done and over with and you got forgiveness, then if you still got HHS money left over, you could use that to cover payroll. It really says additional payroll, but if you're having to use that to cover payroll, that means you got a loss in revenue. What you want to be careful of, we probably don't have near as many people still on the call. You want to be careful of taking all this money, putting it in your account, and taking a bunch of owners' distributions of profits. I would be cautious on that, because we don't know what they're going to come back and look at. And if you do, save it somewhere. Do not go buy a new Porsche. Save it in case there are additional reporting requirements or they start doing some scrutinization of this money. So we don't have any guidance on that. So that wraps up the question. There's one that says if they are doing COVID research. I think it was in reference with another question. So I hope we got that answer for you. Again, we'll follow up on in a couple days. Thank you guys. Thank you 92 that stayed out there and listened all the way to the end. It's been a long 2-hour webinar and I appreciate you guys. All right, bye-bye. How do I